everybody.
Sean and Kelly here, the Price and Price Group of eXp Realty, and what are we talking about today?
Today we're talking about 10 things you can do to increase your curb appeal for a quicker sale and a higher price sale.
That's right. All right, here we go. All right, so before we dive into that, we've got some news we got to talk about.
Yeah, we do.
Okay, so with the decreased interest rates, with the market activity that's been happening, with the decreased inventory, it has been announced that the home prices rose faster in December. This is for the Mid-Atlantic area, so this is our entire area here. It's not even just Northern Virginia.
Right.
But home prices, they rose higher than expected in December. In fact, they were so strong that it was higher than it had been in more than a year. So
yeah, that's right. And it's not like prices here were decreasing anyway through the year. We never got to where house prices were falling in our area. So this is just, hey, we slowed down on the rising, and now it's like, whooshoo.
So just it's time. It's time. If you're thinking about buying, the spring has sprung.
Right.
We're already seeing. We just had a property earlier this week that a buyer was interested in. Sold in 5 days, 15 offers. We don't know what it sold for because they won't be disclosed until settlement, but we're starting to see the multiple offers starting to escalate again. So if you're a buyer, don't wait, because when spring hits, it's going to be chaotic.
Yeah, it goes into the thing we said in a previous video, which was you pick your poison, right?
Yes.
So if you held out because the interest rates were too high, well, we said when the interest rate's lower, then you're going to be struggling to get any property under contract without multiple bids, waiving contingencies and all that. So welcome to it, everybody. You got your lower interest rates, and so now you guys can get back in the game.
Yep, and it's going to get even worse because the rates are going to keep coming down going into spring, and so that market's going to get really aggressive. So, okay,
aggressive, but we got you.
But we got you. Yes, we can still get you in there. All right, so that's the update. That's not the market update. We'll get into more detail. Yeah,
that's just a little
whoop. Okay, so let's dive into what provoked this conversation.
Yes.
Okay, so the first thing to consider is we're talking in this scenario. We're not talking about you just bought a house and you're thinking about what do you want to do with the outside, how's it going to increase value.
It's not for your livability. This is for you need to put a good product on the market to sell quickly and for the highest amount possible.
Yes. And the thing that brought this conversation up was I was with some buyers and they went under contract on a new build, and we were talking to the new build sales rep, and we, as you all know, if you buy a new build property, you're buying that property, it's going to be in the future. In this situation, it's like 4 months, but the purchase is going to be in the future, and in that contract, you don't have an appraisal contingency, so you have to worry about appraisal. You have to weigh the options.
Yeah.
So in the conversation about this, we were talking about the appraisal, and the builder had no issues with it. They said the only time they're having issues is if somebody goes in and spends hundreds of thousands of dollars on their landscaping.
Right, because surprisingly, a lot of people don't realize that when you're getting a new build and you're choosing all the build outs, upgrades, and everything, you're also choosing your landscaping. And quite often there's a basic package, just like with the house, but you can improve upon that. And whenever you start going too far with landscaping, that's money out of your pocket, and you're risking the appraisal for that.
To the point that the builders will have their buyers sign an addendum stating that they understand that putting this much landscaping does risk the appraisal. Right. So that's what we want to focus on here, because if you're thinking about doing some extensive landscaping to increase the value and the sales price of your house, you might increase the appeal of the house, but when it comes to appraisal, you might put yourself at risk.
Yeah, and assuming you're getting a new build, you're not prepping it to sell anytime soon.
Yeah.
This topic is not about landscaping at all. It's just what brought it up. But you want to think, is this something I can put off over the next 3 years? Let's do the landscaping slowly, once we've lived here and we see what we really want as far as privacy. Is there going to be someone in the backyard? Do I want to put more trees in the back, more in the front? All of that kind of stuff is really better spent later after you've been in it. I just want to put that out there.
Yeah, so, absolutely. Yeah. And anything that we talk about, if you're in an HOA or have any kind of an association that is involved with this, make sure that everything you do is approved. Okay?
Yes. Okay. We'll be mentioning that a couple of times.
Yes, we will. All right, so let's dive in. What are the 10 things that we can do? Okay, so the first thing is keep the grass freshly cut and edged. Edging, in my opinion, it's a personal opinion, really sharpens up
I think
the
it's
yard.
a fact. I don't think it's just your opinion. I think that's a fact.
Yeah, it sharpens that yard.
Fact,
It makes
Jack.
it look great. We used to walk around with our kids in our neighborhoods in Florida and stuff, and you would walk along and you'd see this thick edge and you'd see this soft grass and you just wanted to take your shoes off and go roll around.
Well, as a matter of fact, our kids said, "Can we
Yes.
touch it?"
Yeah.
Yes, take your shoes off and touch it. It's great.
So keeping the grass mode edged is really, really important.
Edge just says, wow, they care a lot.
They pay attention to detail.
And it's going to translate into the property that they're getting, and they're going to imagine and already think and assume about you that you care a lot and all the little things that they don't see in your house.
That's exactly right. Yep, absolutely.
Yep.
Pay attention to detail.
Yes.
Yep. Clutter, removing the clutter from the backyard, from the yard. Things like, what are you thinking?
Okay, so what might be fun and really integral to your family is clutter when it's a product. Clutter is a trampoline, a swing set, a basketball hoop. I mean, unless it's done really well, and it's like this is the basketball area, it's almost a permanent fixture that's amazing, that could be a selling point, but just the typical basketball net, I'm sorry, it's clutter whenever your home is a product.
Yeah, because you want them to be able to imagine themselves there,
Right.
and you want it to be clean, and they want to feel like it's fresh. So
Yes.
yeah, and bikes,
I have
kid
an old
toys.
little bunny that I keep outside of my front door that I think, I'm like, this is not clutter. It's clutter.
The other thing you want to do is you want to paint the front door. Now, I'm not going to speak to this because this is our front door painter, so go for it.
There are so many things that are important about the color choice of a front door. Number one, always check with your HOA. If you're in an HOA, you have to get approval from the architectural board or committee, because you don't want to have to repaint it.
Yep, that's right.
But different colors say different things. Different cultures believe different things about the different colors. I'm not going to get into this as deeply as I really, really want to.
And as you did before you
later,
painted our door.
as I did. But yeah, and also if your door is wood, it's different. Should you paint it or stain it? If it's metal, should you paint it or stain it? What direction is it facing? Like, okay,
Yep.
I'm going into it. Not going into it anymore, but it matters.
Yes. And the whole thing about everything we're talking about is when the buyer pulls up to your house, the curb appeal is the first thing they see. Okay, so it does not necessarily increase value, but it increases that draw to the house. They pull up and they see this freshly painted door, the lawn is well kept, all the other things we're going to talk about, and they're going to desire that house. So,
well, that happened with our house in Niceville, right? That we sold. I painstakingly chose this amazing color. And looking back at the pictures, I kind of stalk it a little bit.
Yeah.
They've made a couple of changes, but they kept the front door color,
right.
which was the only one in that whole community that was that color. I'm like, yes.
Yep, that's right.
Yeah. So, and I would do something actually when we have a listing and I'm like, really the front door could draw more people in. I would like a seller to be willing to undergo a challenge. Like, let's see if we increase showings by painting another color 1 week and then go back. That would be fun.
That'd be fun. See if it happens.
Okay, sorry, I did go way too long.
She gets excited about all this stuff. So, okay. So the
You
next
should pat
thing.
me on my head when you say that. That's what it sounds like. Oh, she's so cute.
All right. So the next thing, we got the front doors painted. While we're on the
I'm going to
subject
go
of
on
paint.
painting the fence and the deck.
Okay.
May I continue?
Yes, you're right.
Okay, that's also very, very important. You have something to say about the deck,
do,
though.
I
So
do.
I'm going to,
So I cannot tell you how many times I've walked into a house, especially townhouses, because a lot of them have the deck right off the backyard. But any house, if you walk out and the deck is not the artificial like the Trex, but it's a real wood deck. Number one, we love real wood decks.
but it has to suit the property.
It has to suit the property. And when you walk out and you look at that deck, if it is not treated, doesn't look like it's been cared for or freshly painted, the first thing that comes to the buyer's mind is they say, oh, we're going to have to redo the deck. And that's an immediate deduction on value for them. Same thing with the fence. They can look out at a fence and it can be a beautiful fence. It may be structurally sound, just like the deck could be structurally sound.
It could be almost new.
But that appearance, if it doesn't appear that way, they're going to think they have to make repairs. And they will say it. They will say, we're going to have to replace the deck. We have to replace the fence. I don't want to get into this bidding situation. I'm going to back out. So
That's true. And here's another to build your case. So I'm a huge fan of cedar shake roofs. Okay, I realize we're not talking about roofing right now, but it matches. I love them. My favorite thing is when they're so old that they have the green moss on it, which apparently is like this huge no-no.
Yep.
Okay, so we had to replace our roof. It was gorgeous cedar shake. Some places had the wonderful moss. I'm like, can you install a new cedar shake with moss on it? And they looked at me like I had a third eye in the middle of my forehead. So I realized one day this shall turn into a product, and we got
the metal roof.
a black metal roof.
Yep.
Okay, which is gorgeous. It's fine. So this is another one of those things that but I just installed that deck or fence last year. It's brand new. It doesn't translate like an edged lawn does. They think, I have to replace this. This is going to be a huge expense. So it's not your home. It's a product.
Yep.
And those are facts.
And that brings a good point, because the metal roof gives like a trim, like a clean edge effect, right? So the edging of the yard is a clean edge effect. When somebody pulls up to your front yard, your driveway, you want them to feel clean and fresh. You want, if you have extensive landscaping already, you want those bushes trimmed. You want everything trimmed back in a nice, clean condition. You want to trim your bushes. So this is the next thing: is remove weeds, trim bushes. You want to trim your bushes if they're up against your house. You want to give yourself a foot to a foot and a half from the house. For two reasons: it presents well, and you don't want them too tall. It presents well, but if you're in a situation where you're going to end up with a home inspection, the inspector is going to bring this up. They're going to say it needs to come back, and your trees need to be trimmed as well, so where they're not touching the roof, because that allows critters and roof damage.
And siding damage and all of this. And on a safety note, so we always make sure that I can at least walk through sideways in between our hedges and our house. My granny was actually burgled.
She was burgled.
Or robbed. Yeah, because she pulled up after work one night, and there was a burglar hiding in her like overgrown hedges and stuff in between her house. And so it's also a safety thing. You need to be able to look back and see, not just for burglars but also varmints.
Varmints.
Snakes and whatever.
Burglars are varmints.
They are varmints.
All right, so you really want to get that
for all kinds of reasons. Yes,
absolutely. Next, since we're on the flower beds and fresh mulch.
Even if it's good mulch and thick mulch, put a thin layer of fresh mulch.
Yeah, they want that color. It really makes the yard pop, especially if you have the clean edging. Going back to the edging, if you have the yard is straightened up, all the bushes are trimmed back nicely, it's gonna look really good.
Right.
So, next we want to talk about the actual house itself.
Yes. Okay, so you want to keep your windows clean. Even remove the screens, right? Even do that before we have the photographer come in, because your listing pictures are going to be so much better. Just store them in the garage,
or
some sort of storage room, attic, basement, whatever. But remove the window screens.
Be sure you mark what room they go to.
Yeah, do that. Have all of the windows cleaned. Pressure wash the entire house. You can even pressure wash the roof, and that honestly, that goes so far. Have you seen some of those roofs where, like at the chimney or different places, the water runs down and you'll see the streaks? People think the roof is bad. Oh my gosh. Just, if you don't need a new roof, have the roof pressure washed or cleaned, however they do it. We've done it before, and it was amazing. Clean the gutters. You don't have to. I mean, if they're hanging over, right? You just want to clean them enough.
So it presents cleanly.
You don't want to be like, oh wow, they don't take care of this. That's another one of the edging your yawn.
You need it.
I can't talk today. I haven't slept in for the first time in forever. I should be totally on. You want to edge your yawn.
Edge your yawn,
And
your sidewalks and your driveway. Just give the house a bath. It's like if you were going to sell a car, you would take that car, you would vacuum it, you would take it to the detailer and get it cleaned and waxed, because you want it to present as nicely as possible.
That's true.
Give the house a good bath. And then, I don't personally understand this, but I know that Kelly likes it. I know that it's always recommended by our stagers, but putting the potted plants by the front door.
Okay. I was a tough sell on the potted plants by the front door, because I thought remove all clutter, right? But it sells. It's good because it's that little addition of home.
Yeah.
It's not considered clutter, but do not ever, 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 ever put fake plants anywhere.
Yes, don't put fake plants.
Just don't do it. if it's like, well, like I'm gonna have to keep white, just don't do it at all, right? Just don't.
Yep.
Not artificial, but do it. Just your shrubberies.
Yeah, I've heard like yellow flowers or something. You know, something that's welcome.
I wouldn't even worry about flowers.
Yeah.
Yeah.
Okay. That's
anyway.
So that potted plant. And then something that's not on our list here, but it just kind of came to mind. If you have let's say you have a front porch and it has the columns, and if the paint is peeling on the columns, go ahead and get them painted. You don't necessarily need to paint the exterior of the house unless it's in bad condition.
Yeah.
But again, if you walk up and there's chipping paint somewhere, the sellers or the buyers going to see it, and they're going to think there's wood rot or there's water damage or there's leaking. So just freshen everything up.
And it also bears mentioning whenever you're having everything pressure washed that sometimes that will show where your paint is a little bit loose and off. So that might show you places that you need to do that. And also carry this into your garage floor. You know, if you don't have one of those gorgeous garage floors, which I feel like I'm seeing
more and
more makes buyers feel like, I really like this place. You know, the really nice fleckety painted ones, which I want to do that really.
And paint your garage. Oh my gosh!
But so at least have your garage floor also pressure washed. That'll go a long way. And pay attention to the current trend. If you have like a pillar at your front porch, pillar or column or whatever, pay attention to what people are doing right now, because it's as simple as painting a front door and makes a huge difference. Like we have our house is white with a black roof and black
windows
trim around the windows, and our column is white, and I'm starting to notice, so this is on my it's number 3 on the list. I'm painting it black, and I think it's going to be really, really amazing. So just kind of do that, or ask me. I'll tell you what to do.
Yeah. So little things like that. And we're focusing on things that aren't going to be too super expensive.
Yeah.
Painting the house might get a little expensive. Pay a painter, but
don't paint the house.
Yeah. Well, I mean, you don't have to.
Not for outside. You really just touch it up. Unless it's a really bad color.
Yeah, or a lot of damage.
I mean, you could.
Anyway, we'll get in the weeds here. So again, these are 10 to 11 items that you can do to just spruce up the curb appeal. Not a whole lot of money.
Yeah.
Doesn't mean that adding a pool doesn't add value.
Yeah.
That's a whole other subject, because it could add value to some families, could detract value for others.
People think outdoor living spaces and pools add a lot of value. Not so.
Sometimes they do, sometimes they don't. Here's what they do. They may add value to an appraisal, but they do decrease your buyer pool. Because what ends up happening is...
A pool could decrease the buyer pool, because you're worried about your poor sweet babies.
Yes.
But the outdoor living space will never decrease the buyer pool.
But it does increase, and it also increases
it can decrease your ROI.
Definitely. Okay, so yes, it increases... Let's say you spend $350 on an outdoor living space, and you get an extra $350 on the value, you're net zero. So it's not really worth it unless you want to live in it and enjoy it.
But... we are getting back to the air. Oh, I'm like my grandma smoking. I noticed I do that. I don't smoke, but I'll tell you one thing.
Yes.
Now that we're getting back to where with all the multiple bids, multiple offers and everything, now I really feel like even a zero ROI is going to get people bidding up higher. So
that's true, because it's like a
increase
bonus.
That ROI.
Yeah. Depending on the market.
I don't know, we might cut that part out. Yeah. That's just me. That's my inside thoughts coming out.
There's that filter.
Dang it.
All right. Okay. So hopefully you find this helpful. If you have any questions, leave them in the comments. Reach out to us. Email us. Call us. Whatever you need to do. And now we're going to get over to the market report for the last 7 days, and then follow that with Mortgage Minute with Tatiana. Okay, so here we are with the last 7 days market activity. I'm excited to show you what's been going on, so let's just dive right into it. All right, so you can see, as always, our buyer activity is the orange line. Our blue line is our inventory. So we saw a huge dip in inventory 3 weeks ago. Then last week we saw a large influx of inventory, but the buyer activity decreased twice in the last 2 weeks, and then this week it picked up. So inventory came down a little bit, buyer activity increased, so the two met right there, which brought us to a perfectly neutral market.
for the last 7 days, but what we have experienced in the actual market was we've seen properties, for example, we have a townhouse, we mentioned this on the previous report, we had a townhouse that our buyer was preparing to offer on that ended up getting 15 offers and closing within our going under contract within 5 days. So we're starting to see that pickup of activity again that we've been knowing was coming. It's almost like the spring market is starting to kick in. So it's going to be interesting to see what happens over the next few weeks. If inventory can pick up quicker than buyer activity, buyers might still have a little bit of a window this buyer faced 15 offers, but you may have a little bit of a window. Not all properties got that many offers. But I have a feeling as we get into February and March that it's going to be pretty much chaos in the market. So if you're a buyer and you're thinking about coming into the market, now is the time to get in there as soon as possible. What you pay with a little bit higher of an interest rate, you're going to more than make up for by not having to bid up over asking prices. Sellers, it is time for you to come into the market because the flood of buyers, all of these buyers that have been sitting on the sidelines, that have been waiting for the interest rates to come down, they're starting to come into the market and it's starting to pick up like crazy. So fantastic time for you to sell, to take advantage of all the equity that's built up and get some high demand on your property. All right. If you have any questions about this, please feel free to let us know. And we will be happy to jump on and do a private consultation with you regarding your situation individually. All right, we'll see you on next week's Market Snapshot.
Hey everybody, we have Tatiana.
Yay. Hi everyone, how are you?
Great. So we're here for this week's Mortgage Minute, and we're going to talk about the current interest rates, and then a topic that comes up a lot for us. We're going to talk about pre-qualification versus pre-approval versus the loan estimate, what that means and how it's important.
Yeah, and how to really, shop that loan to get you the best rate from the best lender mortgage loan officer. So we're really it's important for so many reasons. So we really want to dive into that.
Absolutely. But before we do, what's going on with the interest rates? Oh, I'll tell you on our end, we're starting to see those multiple offers tick up. Had a property, the one that the client that we are working with right now, before she wrote the offer, they had 15 offers in 5 days. So we're back up into the double-digit offer situation at certain price points. So what's going on your end with the interest rates?
Yeah, definitely everybody, sobered up from the holidays and now they're getting back to the home hunting mode. And for the past week from January 5th to 11th, the rates remains pretty steady. And between late October and December, as we remember, rates dropped by more than 1 point. And however, since then, rates have been moved a little bit sideways on the market, but in overall, they're still lower. There were in October 6.656 for 30-year fixed, and we have 6.5 for FHA. I've been actually quoting clients at 6.125 on FHA loans. So they're, or VA as well. Government rates are lower than conventional rates, but overall the data projects that the rates are gonna go down this year. So I think it's great time to buy right now. Again, I never, get tired to reiterate that, because right now it's still slower time and rates are lower. As you said, you already see more multiple offers. We get in the springtime, it's gonna get even worse. So it's time.
Yeah.
Yeah.
Absolutely.
Yeah.
Okay.
That's right.
Very good. All right. So, and we'll keep doing these every week so that people can track those rates as we do start entering the spring. So we've got two factors. We've got the rates coming down and the natural cycle of the market picking up. So it's going to be kind of crazy.
I think it would be a really great thing to do another cost of waiting report. Maybe next week we should do that to show people, we're hearing people say, but I heard by the end of the year, it's gonna be, the interest rates are gonna be in the 4s.
Yeah.
So maybe doing one saying, hey, now versus if it gets to the 4s in 10 months, but what are the prices gonna do and what would you have to waive to get that?
And
So
how
I
much
think it
cash?
might be really useful for you to put together a cost of waiting report for us.
Definitely, it's a good idea. I'll do that.
All right,
Okay,
great. A
thank
new
you.
PowerPoint is fantastic. All right. Okay, so we're updated on the interest rates. So we've had this has been since we started our career, and we've tried to explain this to buyers and everything, but I really want this to be a resource that we can use over and over again so that people can really understand what the difference between a pre-qualification, a pre-approval P.O.F.A, and a loan estimate, and why the loan estimate is so significant. So if we can dive into that, I don't know how we want to do this, but
Yeah, okay, so part of the confusion that our buyers had was why I got my mortgage lending license, right? So that I could really understand it and be able to explain it to buyers/borrowers. And it felt like while I have a really great understanding, I would still get ghosted by potential clients who were offended almost at being asked for a loan estimate for me to be able to compare their rates, to give them my very best. You know, they felt like, well, if you could have done something before, you would have said it already,
yeah,
that kind of thing. So I would like to, let's do a Q&A.
sure.
And Tatiana, our expert, amazing mortgage loan officer guru, you're going to answer these questions for everyone who has asked and will ask.
Yes. So first question is, what is the difference between a pre-qualification and a pre-approval?
Pre-qualification is just a conversation. I ask what you think your credit score is, how much you make, how much money you have. Based on that information, this is how much you qualify for.
Okay.
It's just very, very preliminary first step, maybe for someone who is not really planning on buying anything. They just want to have an idea what they can qualify for, what payments are gonna look like. Versus pre-approval is when we do the full application, look at the credit score. By the way, now we can do a soft pull before we do a hard pull if somebody is interested in just checking on without getting hard pull. So but we do pull the credit. We'll look at income documentations and assets and run it through decision engine, which is a very sophisticated program that in 20 seconds analyzes the whole file, the whole complexity of it, and gives us approved, eligible, or not approved. And then you have to play with the file to see what needs to be done to get it approved. I think a pre-approval is not I think, I know the pre-approval is much stronger than just pre-qualification.
Yeah.
When you write a contract, pre-qualification letter is not gonna be taken seriously.
Right. So I want to hit on, I think, 3 points on that.
And
One,
I've got two.
a buyer can be given a pre-qualification letter. This pre-qualification letter is based on the conversation without actual proof to back it, right? So this is confusion point number one. The buyer believes that because they have this pre-qualification letter, it's what we, your realtor, what we're asking for to submit with the contract or the offer contract, right? And so that's what I want to say. It is not that.
Yep.
It's and when I was taking loan applications, sometimes, rarely, but sometimes I had people say, well, what, do you think I'm lying to you? No, I don't think you're lying to me, but sometimes your Credit Karma score is different than the scores we're actually allowed to use for a mortgage loan. And do you think I'm lying to you? I know what kind of bills I have. I know, but I can't say, trust him, he's good for it. We have to have the actual proof. So it's not a slight to anyone to be asked to provide their social and the facts of your credit standing. So that's one thing. The pre-approval letter is very different from your pre-qualification letter. It actually means something. It means your loan officer has seen all the valid documentation, that
Desktop underwriting.
it's gone through the software, and it's a real valid pre-approval.
Okay.
So go, I'm gonna let you have.
So
If I can add to that,
Yeah.
what you're saying, I agree with you. People shouldn't be offended because it's not about them lying. There's much more than just the credit score.
Right.
We do look inside the credit report. We look how new the credit report, like credit history is, how many trade lines, were there any lates, were there any derogatory items. Even if it's a very clean credit history, there might be something that could trigger potentially disqualifying them for getting a mortgage, even though they have a good credit score. There are much more to that. And for the income portion, sometimes people actually underestimate how much they make. And by looking at income documentation, they might actually get qualified for more, but sometimes they would qualify for less because we look at and calculate income differently than the person would calculate their own income,
Right.
Yeah.
especially if they're self-employed.
Yeah.
Well, and also if it's a relatively new job, right? So some
Right.
people think, oh, well, I've had this job for a year, this is my income. Well, you can't use that if it hasn't been 2 years. And then and stop me if I'm wrong on any of these points, but likewise, let's say someone said, oh, well, I just started this new job a year ago, so I can't use it. I have to be here for 2 years, but sometimes you can use it if it was in the same line of work, right? So it can go either way.
Exactly. So it all depends on what type of income it is. Just to your point, someone have been maybe on commission for a year only. We're not going to be able to use it possibly, depending on the program. So there's just so many little things, nuances that regular people don't know because they're not in this business, right? So it's always good idea just to do the application and get exact information.
And from the buyer's perspective, or from the seller's perspective, a seller is not going to accept an offer, take their property off the market. The seller's agent is going to call your lender. They're going to confirm that you got the underwriting, that they've seen the documents, that that this is a true valid pre-approval letter. And if it's just a pre-qualification, the seller is not going to take the property off the market when they have three other offers that they can consider. So,
right. Well, and one more thing on that point is we know how to decipher a pre-qualification versus pre-approval. We also will always contact the lender, but not all agents know that and not all agents do that. So to protect our clients, you, the buyer, you do really want to have the pre-approval for yourself, because let's say you only go in with an offer on a pre-qualification. The agents, yours and the seller's agents, don't know what they're doing. It's accepted. Then you start going through the actual underwriting process, realize, oh, wait, we can't do this. And then maybe you lose your earnest money deposit and it sets you back and you can't buy yet because you've lost what?
15, 30,000.
Yeah, thousands of dollars because you haven't done this extra step for whatever reason, and some of those reasons are, well, I don't want it to hit my credit. Let's talk about that, right? It hitting your credit, you said a soft pull versus a hard pull, and then they're worried about applying with multiple lenders because they think it's going to affect their credit more than just one time. Can you address that?
So, the mortgage, going back a little bit when you were talking about different credit scores, the mortgage companies use FICO 2, 4, and 5 to pull the scores. All known soft pull companies like Credit Karma or CreditWise, they use Vantage or they use FICO 8. It's different algorithm. They don't go farther than 2 years in the history. They don't look at some of the collections if they're like less than $100. So because of that, their credit scores are higher. Then this credit score that we get, again, FICO 2, 4, and 5, that's what we use. And when we pull the credit, it does not lower our credit score, the score that we look at. The client might see the score drop on Credit Karma, but we don't go by that score anyway, so it doesn't really matter. And also, they have 45 days for multiple mortgage inquiries as considered as a one inquiry. So it's not gonna change their score even on their end after the first inquiry. But now we do have a soft pull. At some point, we will need to do hard pull later on. But in the beginning, if we just, want to see what the score looks like on our end, we can do soft pull.
So as a non-lender, because I know you guys have this special language. So as a normal human, you're saying that if you check my credit, this is before you could do your soft pull. So let's talk, 6 months ago. If you checked my credit and my Credit Karma score went down a little bit because it took a ding, you're saying the credit score that you were looking at, you don't even care about what this does. The one that you're actually looking at is not affected by you pulling that credit, and they have 45 days to do multiple pulls on that credit, and doesn't matter.
Correct.
Interesting. I didn't know that.
Yeah, and 45 days is plenty of time for you to secure
some pre-approval,
the home loan and know really where you want to go with that, right?
So just to throw a little bit of confusion into this matter, there are certain banks, I know one, I'm not going to mention them, BO.F.A, that their pre-approval letter says very clearly on the top of the letter, pre-qualification. So some banks, some lenders will put their label their pre-approval letter as a pre-qualification. So that's where the buyer's agent needs to really do their diligence and make sure that everything was done appropriately.
Right. So the company I worked with, Tatiana, it was topsy-turvy from how we, as a real estate agent, talked about it. In our company, a pre-qualification was the serious one where they'd actually run it through DU, and their pre-approval was just the conversation. So I had to, it's like,
interesting.
So the banks can, their lingo can also be different.
Yeah.
That's interesting. But I think what's important is not the header of the name of the letter, but what's inside the letter, right?
Yes.
So inside the letter, it needs to say it's based on us reviewing income, assets, documentation, and running it through desktop underwriting. That's clearly a pre-approval versus if it says that based on conversation or whatever language would be on a qualification letter.
Okay.
Yeah.
So that's what you need to pay attention to, what's in the body of the
in the body, not necessarily, not the heading so much as the body. That's very, very good.
Okay. All right. So now, we've talked about the first two. Now let's just briefly, because I know we can go deep dive on this, briefly talk about the P.O.F.A, the difference between the P.O.F.A and the pre-approval letter.
Pre-offer full approval.
Yes.
So the pre-offer full approval, P.O.F.A, is different because that's when we actually, it's equivalent to a full approval. We send the file for a full approval to underwriting. When the underwriter, a person who has higher level of authority, they'll dissect the whole file, that we do verification of employment or any other verifications we need to do. So they look at the file deeply and they say, we commit to lend you the money. Maybe they'll ask for some additional documentation before we finalize and give a, clear to close, right?
Yes.
But that would be the commitment letter. The P.O.F.A is the one that you would do while you're looking for property. There is no property identified yet. The regular commitment, and a lot of lenders don't do P.O.F.A. They wait until you have a property and then they can send it to underwriting.
Right.
We can send it before that, and that's two pretty much similar things. That's one that has property, and other is to be determined, but it's a full approval. It's basically you're gonna get a loan,
Right.
as long as maybe you find the property and
It's so,
adequate.
yeah,
Yeah.
it's so key because we can write your offer not contingent on loan approval,
Yeah.
which is huge. Now, you still have appraisal.
Yeah.
And you still have to find the property, right? But that's huge.
It's
I
almost like a
mean,
cash buyer. We can shorten the settlement dates. And
Yeah.
don't you guys offer the $10,000 close on time if there's a
Yeah, so we call it 10,000 closing guarantee,
Yeah.
something like that. Basically, where we say that if we drop the ball and we don't close on time because it's our fault, we would give $10,000 closing cost credit to the seller.
Yeah.
And I'm telling you, this company, they could make it $100,000 because you guys never drop the ball.
I've never
on
had
wood.
that happen, no.
This is a very safe guarantee for this company.
Okay. Okay, so we've got pre-qualification to pre-approval to P.O.F.A. So even in any of these situations, pre-approval or P.O.F.A, now we have got a ratified contract and we get a loan estimate. So tell us about that, what that means, and you have a further.
Well,
question?
I do have a further question because oftentimes we get to that point where we're under contract. And then the buyer decides this is a great time to shop the loan because someone else has offered a better rate. So that's when we say, okay, well, there are a couple of things to consider here. One is when we submitted the contract offer, we submitted the pre-approval along with it, naming a certain mortgage lending company.
Yeah.
To change that means that we have to at least alert the
Notify
seller
them.
about this,
Yeah.
right? When you bring someone else in, typically we're trying to do a really, really short contingency period. And if you're bringing someone else in that has to play catch up, right, just for this better rate, then there's a little bit of jeopardizing of your EMD here.
Yeah.
That's risky. So then let's say Tatiana, you're the lender that we submitted the pre-approval for this offer with, and let's say I'm the buyer, you're my agent, and I say, hey, I'm really glad we're under contract, but Navy Fed offered me a better rate than Tatiana, so I'm gonna see if I can get an approval from them. What do I do?
So a couple things, especially if we have a shortened closing period, like we have a 2-week close, Navy Fed will never meet a 2-week settlement. So even if you get that cheaper rate, you're never going to meet.
Okay, let's
the
say
settlement.
someone who is quick.
Okay. Well, then you have to have that the loan approval, you have our loan estimate. You have to quickly have the conversations back and forth, and you have to decide within a day or two because.
What do you mean a loan estimate?
So that's what we're talking about. The loan estimate. And why is the loan estimate so important? Why is that what you need for your currency to determine what the actual competitive offers are?
So the loan estimate is a worksheet that shows the breakdown of the interest rate, the monthly payment, the closing cost. When someone is shopping for the rates, and why would you shop the rate when you're under contract? One of the reasons, because rates change every day, right? So if you got pre-approved a month ago, the rate is different than what it is now. Hopefully, when you write in an offer, your lender gives you a breakdown of an estimate for this particular property, so you know what rate is going to be. So, but the estimate shows all the breakdowns, and when clients shop for a rate, they need to look not just at the rate and the bottom line, how much they need to bring to settlement, or what the payment it is, but they need to look deeper. They need to see, are there any fees associated with that interest rate? Because I can quote someone 6% interest rate and another lender give them 5.5%, but they charging $15,000 in points. So I can maybe do the same or even better. So you want to compare that. You never look at the very bottom line. Some lenders under disclose closing costs. Some lenders over disclose. I prefer actually over disclose them because when client comes to settlement and they need to bring $3,000 less than what they thought, I think it's better than vice versa, right? They need to bring
Yeah, absolutely.
3,000 more. Also, in some cases, we need to look at the monthly payment breakdown. Sometimes clients just look at your monthly payment is higher than somebody else's, but sometimes lenders don't include homeowner association dues in the breakdown, or but they have a mortgage insurance that is $100 higher than mine, but they didn't include HOA. So you need to look deeper into that. And when someone, you work with the lender for period of time, and then you just go to someone else because you think they're doing better, you want to give opportunity to your lender to actually look at the estimate and match it or beat it. And the reason why we need an estimate from another lender, if it's better estimate, to try to match or beat, is not because we just should have done something better from the beginning. We have certain level of authority to go to the certain level, like certain bottom line of the rate. And if it's something lower, we need to go to management and say, here is the estimate from XYZ. What can we do? Can we beat or can we match? I can't just go to my manager, say, this company is giving 3% interest rate, and we just, oh my gosh, let's just give 3%. You have to see what it involves. Maybe it's a 1 year arm, negative amortization with 25,000 in points. Like, how can you get to this low rate? So we need to look. And it's good for you, for a second set of eyes, to look and point out things. Good for you as a buyer. To point out, okay, well, it's great, but it's actually pretty bad deal. You're paying so many points, you're gonna recoup the cost of it in 15 years. Does it make sense for you to do that? So that's very important.
That's exactly right. I used to tell borrowers, I'm like, if you think of this loan estimate that I'm asking you for as my ticket to get a seat at the table with the big guys, to be able to give you a better deal. This is my, I have to have this ticket to go into that room to try to work this deal for you.
That's a great point.
Yeah,
definitely.
That's our ticket.
You can use that.
I will.
Your ticket in the room.
And I want to say that we've had several clients that have come to you with their loan estimates, and you've been able to beat what they were doing. And they were considering switching because the interest rate was lower or whatever, factor. And they ended up coming back to you with it, and you pointed out, yeah, but they're charging you this, or, I can get you that. And if I get you that for the same price, it's actually going to be at this percentage rate. Or so you've beaten a lot of people with that loan estimate once they come to you with that.
Yeah, Tatiana, you usually either show that your rate was already better whenever you show them what they're actually looking at, apples to apples, or like you said, you go in and you're like, I mean, yeah, I can do that and it'll be better. It's really great.
And I think, when you work with someone, just give them a chance, because loyalty is a good thing.
Yeah, absolutely.
Right.
Yep. And so that loan estimate, that is that what happens? Is that with the lock? Like, do you only get the loan estimate once you lock the loan, or do you get the loan estimate and it can still be floating? Because that could
That's
change.
an excellent question.
With Prosperity, we give estimate from the beginning, even if there is no property, if there's just from the very beginning, we give the estimate, so clients can see what to expect. I know some lenders, I'm not gonna name them, but they won't even give an estimate. They won't even quote a rate until there's a contract. I'm not sure how it's even possible and somebody would take that, because you taking something, you don't even know what you taking. Can you afford this? Maybe in lenders' eyes, you qualify for it, but not necessarily you're gonna afford it. I had so many clients that qualify for much more than they want to spend. So it's important to know what your payment is gonna look like. Maybe you qualify for $7,000 monthly payment, but you don't want to spend more than $3,000. Now you're under contract and your payment is gonna be $7,000, and you're gonna be stuck with that.
Yeah.
if you can't get out. So it's important to have an estimate from the very beginning.
Yeah,
Okay,
absolutely.
makes sense.
Yes.
All right.
Anything else that we need to add to this topic?
No, I've gotten all my questions answered.
I think, you
My
know,
eyes are doing this.
I think we covered it all. It's just, it's important to get pre-approved.
Yeah.
Don't get offended of getting pre-approved, and don't
Yeah.
get offended if you know you're trying to get better rate, and just give that estimate.
Yeah.
Yep.
And to know that, you know, we're all in it on the buyer/borrower side. Like we want you to have the best rate. We want you to get the best deal. We want everything to work out perfectly for you. So let your agents and let your loan officer really work for you. Let us in every aspect. Let us know what you're thinking. Don't ever ghost us because you're worried about either asking too many questions or giving out too much information or whatever. We understand that your lives are still going on and there can be more and less chaos and stress at times, and to have patience with yourself, because there is a lot going on with your lending and with the real estate market and with the contracts, that you're not expected to know it all, and that's what we're here for.
Yeah, and you know, just we also need to look beyond. Sometimes we need to look beyond just numbers, right? Because you're gonna get a better rate, you're gonna get terrible customer service, you're gonna have a delayed settlement. You don't know what's going on. Everything is messed up. So
Right.
just for maybe $10 less a month in the mortgage payment. So you need to analyze and see, does it even worse going somewhere else just for a
Right.
little bit cheaper loan?
That's very true. We've had several lenders that we've worked with clients who seem to not actually read the part of the contract that says that our buyers' deposits are going to be lost if they don't get either a denial, an official denial, or approval by a certain time, right? So they don't seem to be aware of that. And so on our end, we really have to stay on top of it. When you work with someone like Tatiana, you don't have to stay on top of that. They're aware and they're sensitive to the fact that you have a lot of money on the line and that your deadlines are vitally important to this deal and your household state, right?
We've had two very specific deals that we've had multiple issues with bigger banks. But we've had two. We had one with a national bank that the loan officer was actually in New York, that we were fighting tooth and nail with them just to get a supervisor on the board and get above that supervisor to get somebody to honor the fact that we needed this
I'm sending
document.
contracts with highlights
Yeah.
about around the paragraph of, do you understand?
Yeah, because our buyer was about to lose their EMD just because the bank didn't meet the deadline. And then we had another contract with a local big
And that one
bank
was
here.
over $20,000 that
Yeah.
we were about to lose.
Then we had another one with a $2 million property here that it was a $85,000 earnest money deposit. It was actually Kelly's first deal. It turned out being her first deal as a lender because she recognized at the very beginning of the transaction that this large bank was not going to be able to fund the loan. So she jumped in and her bank was able to do it. But that bank, because it was so difficult, it got down to the wire even with her company to be able to do it. But that big bank never gave us a denial letter. We had a 21-day finance contingency and they said, oh, it's going through the process. And they never gave it to us. So if they hadn't pulled it out, he would have lost his $85,000.
Right.
So it is very important, the lender that you work with. It's critical. It's not just about the interest rate.
Yes.
You know, in some states, even contracts are different from state to state.
Yep.
Even within the state, sometimes it's different. And some contracts say suggested closing date is such and such. Here in Virginia, it's not a suggested date. This is the date.
It's on or before, man.
Yeah. So, but the lender that work in the state where they're all relaxed, I don't know, you know, bathe in the sea and they don't really care. They're not gonna be in a hurry. They say, okay, well, this suggested date, and when date comes, they say, well, but it was suggested. We're not ready. We need another 2 weeks extension, and everybody start pulling their hair out because it's not like that in here in Virginia.
Yeah.
Yeah, that's true.
All right.
That's true. Okay, I think this was excellent. I'm sure we're gonna be sending this to a lot of people.
Yes. I'm just gonna mass-
I hope
mass
we all
email.
like our hair.
All right. Well, okay. So everybody knows how to get in touch with us on our end. How do people get in touch with you?
You can contact me at any time, 571-245-3000.
Okay.
That's my
All right.
number.
All right.
Thank you,
See you
Tatiana.
next week.
Thank you, guys.